Copper continues to impress, and did Filo Mining drill the hole of the year? Welcome to Kitco Roundtable. I'm your host, Michael McCrae. Editor Neils Christensen is in. Hi, Neils.
Hello, everybody. Happy Friday.
Kitco correspondent Paul Harris. Hi, Paul.
Hello.
And our guest is President and Chief Executive Officer at Lundin Gold. It is Ron Hochstein. Ron, welcome to Kitco.
Great. Thanks very much. Thanks for having me.
If you follow mining, Ron has been at the head of one of the biggest development stories over the past 7 years. Lundin Gold acquired Fruta del Norte in Ecuador in 2014 for $240 million. The company has spent $692 million to build the mine. Commercial production started last year, and the mine is set to produce 340,000 ounces of gold per annum. Ron, a belated congrats.
Thanks very much. Yeah, it's been quite a ride from 2014. And the other thing, Michael, we're doing it in Ecuador. Ecuador is their first Western large-scale mine built here in Ecuador. As Paul and you guys all know, Chile, Peru, Colombia, long history with mining. But this was the first mine actually built in this country, and a lot of people thought we were crazy coming into Ecuador, but it's been a phenomenal story. And we're 1 year now after commercial production.
Bring us up to date. You reported your quarter.
Yeah, we just reported our quarter earlier this week, and record production, 104,000 ounces in the quarter. And the numbers, the analysts were a little bit disappointed because a lot of it we produced in that last month. So our sales are pushed into the second quarter. But we actually sold over 50,000 ounces in April. In 1 month, we sold 50,000 ounces. This is a phenomenal ore body. The people here in Ecuador, the communities and everything, it's just gone so well. The quarter, we generated about $62 million in free cash flow, and which currently is about 25% yield. So not too bad. And as we did pay down a bit of debt, but this mine is just a phenomenal mine, and everyone's known that for quite a while.
And $2.7 billion market cap. So it's grown from a crazy idea for some to a very substantial company.
Yes, and a lot to do with the team we were able to put together, with the construction team, with G Mining out of Canada, the team that we built, and then having the Lundin backing in order to do this. We never stopped. From the time we had to get that feasibility study done, we just kept going through early works, basic engineering, construction. And so it's really been a team effort, and it's nice to be pouring gold.
You might hear some beeping in the background, and we're keeping it real. Ron is actually at the mine site in Ecuador, and they are producing as we speak. Ron, we do want to talk about optionality. There's been a real swing from, I would say, probably from a year ago to now, and a real change in what the landscape looks like. First, let's switch to metal prices. Niels, two big pieces of economic data this week. Can we start with the inflation report?
Well, sorry, three big reports came out this week. Obviously, inflation is what everybody's looking at. Just CPI was incredible this month. Incredible because even with high expectations, it was much higher than what economists were expecting. Annual inflation rose 4.2%. Its highest pace since 2008, so 13 years. Everybody was sort of expecting this, the base effects, but again, the inflation threat is definitely turning real. And the day after that, we had producer prices, which annually rose. The headline rose 6.2%. It's biggest on record since they started calculating annual producer prices in 2010. So it's just, and I think that's going to be something that gold investors are going to want to pay attention to, because as much as consumer prices are going up, producer prices, that leads consumers. Companies will be forced to increase their prices, and consumers will have to pay more. But it really starts, this is PPI is really where this inflation starts. And this is why, some people are really worried that inflation is going to be more than transitory. What the Federal Reserve is staking their reputation on right now. Interesting. So and then to sort of wrap it all up, the last piece of data we got was today, which was retail sales. Headline figures showed no increase. March data was revised a lot higher, so that kind of eased the pain a little bit from this disappointing report. But the question now is: so we have high inflation and uneven economic data. What does that do? And for a lot of people, it's kind of this Goldilocks. And maybe Ron could speak to this more, but sort of this Goldilocks scenario where inflation is going to rise, but the Fed is going to be forced to sit on the sidelines. They have this flexibility, because the economic data is not heating up, and especially like the people got their stimulus checks, and in April they weren't spending it. So how does this all play out? And I think right now, though, it's very much this gold's in this sweet spot as this inflation hedge. So it's going to be fascinating. So right now we're not really seeing much traction, but a lot of guys are still keeping their eye on $18.50 an ounce.
Paul,
I think a couple of news things I picked up on this week that may or may not be relevant. The prices for used cars and trucks in the US is booming. It's going up. So people are starting to spend money again. Perhaps not on what the government would like them to spend money on, but things are happening again. And I was reading this morning that President Biden has said that, if you've had your COVID jabs, you can go out and do whatever you want. You don't have to put a mask on anymore. So that's obviously going to be a key thing to, people's lives returning to normal and presumably going out and spending and doing all the things they usually used to enjoy.
So interesting. I did note that the used car sales. So a lot of that has to do with the chip shortage in new cars. Like they're just they're not able to buy new cars as easily. But this is also plays to the fact that maybe this is transitory. You're not going to go out and buy a used car every month. Well, I hope not.
Till the next bit comes in.
Yeah. So I mean, so like that's going to fall down. Like that's going to subside next month, and how much of that is going to be sort of priced out as we move forward and we get past these base effects. That's the question. And right now, I don't think anybody has any real answers. So it's just. But for now, I think for maybe Ron, make hay while the sun shines. I mean, inflation's going to drive gold prices up. So,
well, yeah, Niels, we agree. But also too, you talk about inflation. We're focusing on the consumer side of things. We were looking, bringing supplies in. We saw yesterday that Pacific freight rates, ocean freight rates are going to double next year. And some other things that we're seeing when, looking at it from the front end, and that inflation, we're producing gold, but other mines producing copper and all that, that's going to flow through. And, iron and whatever you're producing, those costs are going to go up and inflation, I see some people saying, oh, this is transitory or whatever, but not from what we're seeing. This is something we're going to be facing. And I think we've seen just the tip of the iceberg. With the numbers that came out yesterday.
I think you can already start to see that in the gold space. Most of the companies have reported their first quarter results, and pretty much all of them, all-in sustaining costs are increasing. They're obviously trying very hard to keep them down, but it's just bigger than them. I think only a handful of companies actually managed to reduce their all-in sustaining costs. So the inputs, the cost inputs are increasing. It's the expansion of the cost base.
Well, yeah, and so this is why I think PPI traditionally is not really a market moving number, but I think going forward it's going to be, because it's going to flag whether this is transitory or not. And I agree. I don't think it is. I think if producers are seeing higher prices, and we've seen a lot of anecdotal evidence as well in IMF reports, in the PMI reports from the ISM, other anecdotal stuff saying that all of this economic growth that we're seeing is coming at a cost, and input prices for companies are increasing. So it's a fascinating time, and I think and you say in April that you sold 50,000 ounces.
50,000 ounces, yeah, in April.
That this is the time, I think, we're starting to see activity come back. It started in April, we bounced off those lows, and now we're looking, I think the next leg, 1850, and once we get past there, then a lot of people are actually talking about we could see new all-time highs by the end of the year. So definitely the second half of this year is going to be the one to watch for gold and silver. I think silver has that nice little sweet spot too, where it's a monetary metal and an industrial metal, so it's getting the best of both worlds.
I want to bring you in for a larger discussion about Fruta and how the landscape looks, Ron. But you did mention it. I just want to bring it up while we just happen to be on this segment. You mentioned about transport seeing a real spike in prices. Are there any other types of inputs that you could see that are also going to be happening to the mining industry? So, for instance, how are we doing for oil costs?
Yeah, for oil costs here, diesel prices are rising a little bit here in Ecuador, but it's still subsidized to a certain degree. And most of our inputs are power, and so here in Ecuador it's hydro, so it's not that big of an impact on us. We are not seeing, because Ecuador, Latin American country, we're actually U.S. dollar based, which a lot of people don't know. And so our inflation actually in country, so labor costs, those other things that we do, we're not seeing a lot of that here in Ecuador at all.
Niels.
Well, I wanted to quickly ask, third quarter last year we saw record margins. How do these input costs impact the margins? Is it, can you make up for that with increased production and increased sales, or should our investors looking at maybe shrinking margins sort of going forward because input costs are rising?
That's a great question, Niels. But the great thing about Fruta del Norte and Lundin Gold is Fruta del Norte is one of the highest grade gold deposits in production in the world today. Our average grade in Q1 was over 10 grams per ton. And our average grade, or the reserve average grade, is 8 grams per ton. So for us, that's what I think for investors, that's what we love, is we're not in the same boat necessarily as those that are producing in the $1,000 an ounce range, where they really do have to focus on all those inputs. Obviously, one of our pillars is operational excellence. Even though we got great grades, we still want to focus on doing the best we can. But our margins are pretty significant at even $1,800 gold. Our cash cost last quarter was $672 an ounce. So
let's not be modest, Ron. You got a margin of about, let's say, $1,000 an ounce. First quarter, all-in sustaining cost $830 an ounce. So you're sitting pretty comfortable.
Yeah, but we can't sit on our laurels, Paul. You know us; we keep pushing, and we want to get our costs down. And I truly believe we'll be able to get our all-in sustaining costs down with a 6 in front of it.
Wow.
So.
Niels, there was a very bullish weekly survey that you published.
Yeah, so the gold survey, I think this just sort of fits with everything. If the Fed's on hold, gold prices are going higher, and we see that. So analysts, 77% of analysts we talked to this week were bullish on gold for next week, and everybody's sort of looking at that 1850. So 1850 is a really interesting number. It's an important retracement. For Fibonacci technicals, it's an important retracement point, and it also represents the 200-day moving average. So if we can get above that, and I think there's been some reports out, gold right now is one of the only major commodities that is traded below its 200-day moving average since the start of the year. So there's a lot of, I think there's going to be a lot of interest if gold can get above that level. I think you're going to see a lot more momentum.
I think I made an error. Niels, currently, what is the gold price?
1836 and change, I do believe. June
1842 I've
futures.
got.
Yeah, I think I made an error. I said 1850 at the start, and I was still fixed on your weekly report. So my apologies. You can find I'm stepping on everything today. You can find the weekly survey every Friday on Kitco homepage. Copper hit a record high on Monday. Copper hit an all-time high of 10,747. Copper stayed above the 10,000 level through the week, but copper did retreat and was down 1.1% for the week. There was another bullish report for copper that Kitco published on Tuesday. This time it was from Gehring and Rosenzweig Associates. The analyst stated, "We're strong believers that copper prices are heading significantly higher. The last time copper was in a bull market was between 2001 and 2011. That is when we saw copper hit a seven-fold increase in price, rising from 60 cents to 462 per pound. A similar rise is possible," writes the analysts, especially considering that the fundamental drivers are even more bullish in 2021. And of course, the month kicked off with Goldman calling copper the new oil, which said that the metal could hit $20,000 per ton. And speaking of copper, Paul, what did Filo drill and why was it so spectacular?
Filo Mining discovered what it says is a significant new zone of high-grade copper, gold, and silver mineralization at its Filo del Sol project in San Juan, Argentina. San Juan's the province you want to be in Argentina for mine development. Drilling there intersected the longest high-grade intersection to date in what they interpret as a feeder zone for a high sulfidation epithermal mineralization. And some are calling this the best drill intercept of the year. Highlights included 163 meters grading 2.31% copper, 2 grams per ton gold, and 183 grams of silver for a 5.43% copper equivalent. So 163 meters at 5.43% copper. An amazing intercept. And this is why I love the sector. That intercept sent the stock up 86% from $4.18 a share to $7.69. An incredible day's work, so to speak. Ron, you're part of the Lundin Group, obviously. What was the reaction of the Lundin team to that intercept, and what does it mean for the project?
Well, for us, the Lundin Gold team, I've been with the family, worked for the family now for 25 years, and we still get really excited about those types of things. And it was really exciting for Jamie Beck, President CEO, and his team. That team, Bob Carmichael, Wojtek Wadzicki, and that, this isn't their first. Jose Maria, just not too far away, was a discovery, and then Los Olados, which sits with NGX. They've had 3 discoveries. But what is really exciting, Paul, is that hole ended in mineralization. They ran into some drilling issues. So, how much more is there? And then there are 5 rigs, I think, turning right now. So I think this story is just really starting to unfold. I had the opportunity of going to site in January of 2019, and really exciting opportunity. That oxide zone, you see copper right on surface, and the oxide copper, and it's really exciting. And I think Argentina, it's been a bit of a challenge, but in some respects, I think it's a great opportunity. And as you said, San Juan is a province to be in. So we're all really excited.
I was on the same site visit as you last year, and one of the things I remember is that the team talking about that there's potentially a huge district there, and Filo got it all, got the whole area staked, and it's stepping out to the north and hitting. How big could it potentially grow?
Well, you remember the geophysical anomalies are huge there, and we weren't that far away when we drove from the Jose Maria project, which has got a feasibility in place now and has got the team in place. They're moving forward with with the more detailed engineering, and that it's a district. It really is truly potentially another copper district.
Amazing! That's excellent news.
Yeah. And with the prices that you're talking about, Michael, fantastic news.
Ka-ching.
Paul, there's a company called Spanish Mountain Gold. It is headquartered in BC, and their project is in central BC, close to Mount Polley and Gibraltar. What did their pre-feasibility study say?
Yes, Spanish Mountain Gold released a pre-feasibility study this week, looking at average annual gold production of 150,000 ounces for 14 years at an all-in sustaining cost of $801 an ounce. The company said this would generate a post-tax net present value of 655 million Canadian at a 5% discount rate and an internal rate of return of 22%, following an initial capital cost of $607 million, and that's at a $1,600 per ounce gold price. At a $1,800 per ounce gold price, the project economics improved to an NPV of $888 million and a 27% IRR. So, looking good there for Spanish Mountain.
Of course, that's close to a lot of activity in South Central BC, being close to Barkerville and the Caribou project that Osisko is with. Three big money stories. Coeur Mining bought a 17.8% stake in Victoria Gold, Paul.
That's right. Coeur's buying this from Aurelian Resources Partners, one of the long-standing investors in Victoria Gold. They're paying 117.2 million Canadian in cash and stock, in what could be a warm-up for an eventual takeout. And in some ways, this move potentially could have been partially stimulated by AngloGold Ashanti increasing its foothold on Corvus Gold in Nevada. Corvus Gold has the Motherlode project there, and that's pretty much in between AngloGold Ashanti's Silicon project and Coeur Mining's Sterling project. So AngloGold Ashanti has recently provided a 20 million loan to Corvus. So it looks like it's potentially going to go ahead and take that company out. And so Coeur may have been having its eyes on that, but has to look in other directions now. Good news for Victoria Gold, obviously, and potentially more M&A transactions to come.
Triple Flag Precious Metals said on Monday that it had filed a preliminary prospectus to raise $250 million. Triple Flag is a gold-focused streaming and royalty company. Some of Triple Flag's royalty and streaming deals include agreements with Nevada Copper, IAMGOLD, and Zijin Mining Group. In February, Triple Flag recorded revenue of $112 million on 63,000 equivalent gold ounces. Last week, McKinsey came out with a study on royalty and streaming companies. The sector should be healthy, but scale matters. Consolidation is needed amongst the smaller players. Paul, tell us about Artemis and its plans to raise 156 million Canadian to advance its Blackwater.
Yes, British Columbia is obviously a key area of interest for the gold mining space, and particularly the gold miners. Artemis Gold, as you say, has arranged to raise $156 million Canadian as part of the project financing to develop the Blackwater Gold Project. Earlier this year, they lined up the debt financing with a syndicate of banks, and now they're obviously doing the capital raise to get all the money they need to put that into production. So another very positive story there for Artemis and for British Columbia.
According to Kyrgyzstan, on Saturday imposed a $3.1 billion fine. That's $3.1 billion fine on Kumtor Gold Company, which operates the nation's biggest gold mine, after ruling that the Canadian-owned firm had violated environmental laws. That, according to reporting by Reuters. The district court decision came just a day after Kyrgyzstan's parliament passed a law allowing the company to temporarily take over the company if activities pose a danger to human lives or the environment. Despite the woes, Centerra had a knockout quarter. Q1 2021 earnings were $167 million, a 737% increase compared to the net earnings of $20 million in Q1 a year prior. The company said that the increase was due to increases in ounces from its Öksüt as well as its Mount Milligan mines, talking about BC. The company noted that there's a great deal of uncertainty regarding the future production operations of the Kumtor mine, given what the changes have been, and they are making information about it available because it may be material to the guidance of the future of the company. I'd like to bring in Ron again. So we have been talking about the increase in metal prices. I mean, it's really been a year, Ron, because you had, I think it was about a year ago where you had a real plummet, and then you had a real, how would you say, it was looking dire. But now we're suddenly at this point where we're seeing really strong and healthy metal prices. What happens with that? What happens with your metal plan, or what happens with your mine plan? Sorry. And then how can you make adjustments of that going forward?
Yeah, it's a good question, Michael, but that's why we talk about Fruta del Norte being a great ore body. It more or less has a natural cutoff. And so even though we talk about, at higher gold prices, that this thing is, it's as Lucas Lundin always used to say, it's like a buried gold bar. So it's kind of a natural cutoff, and it's just a great ore body. And for us, as gold prices rise, we just want to make sure we're in those areas. We've got some stopes that average 30, 40 grams per ton. Those are the ones we want to make sure we're in when we get those better prices that Niels is talking about.
Does it have flexibility though, in terms of like, is there certain parts of the operation that suddenly become, that suddenly you look at that is going to be changed in terms of the economics, in terms of the mine plan, or are you pretty much locked in?
We're pretty much locked in, Michael, because it's an underground ore body. Open pit, sometimes you have a little bit more flexibility, but this one, we're kind of locked in because also geotechnical. You got your backfill sequencing, your stoping sequences. You're not totally handcuffed, but the mine more or less tells you what you can do.
You have more cash now, and certainly you have a lot more optionality than you could have planned for. You got to this point. Talking generally, what type of opportunities make sense for Lundin Gold?
Well, for us, there's a couple that we're going to see the benefit of here real quickly. We talked a little bit about the mine plan. One of the things we did do, even though we've only been operating for a year, we realized we can do more. So we're actually have a project going on right now, low capital cost, about just over 18 million, to increase throughput 20%. So we're going to take the mine up from 3,500 ton a day to 4,200 ton a day. So that's one thing we're doing with the cash. We have a regional exploration program. You mentioned we acquired Fruta Del Norte for 240 million from Kinross. It wasn't just Fruta. It was a fairly large land package here that has only had 18 drill holes in it outside of Fruta del Norte, 38 square kilometers. And we've got the same team that found Fruta working with us. So those are our top priorities. Third, pay down the debt, and then look see what else is out there.
Niels had a question. I just bring in a set, but did you have an announcement on what your exploration drill program was going to be, Ron?
Yes, we did. We actually have two programs going on right now, Michael, an underground one because we still see there's some real opportunities that have not been drilled out yet underground with Fruta, so a chance to increase it, but also a regional program. And that's where drilling, we've got 2 rigs turning at a prospect called Barbasco. And Steve Leary, who was the exploration manager for Aurelian when they discovered Fruta del Norte, feels that we've got all the signatures and everything of another Fruta del Norte, and it's just 7 kilometers away to the south.
Niels?
So I just wanted to follow up with that. Lundin has been involved in a lot of big discoveries, a lot of big projects. What do you think is the potential out there? I mean, everybody sort of says like these big, million ounce mines are getting harder and harder to find. What does the environment look like going forward?
It's a great question, Neil. And I think the benefit we have here is that I talked earlier about, mining is such a big part of the economies of Peru and Chile, Colombia. Ecuador just has not seen the drill bit. And so if you look at it now, one of the issues is it's covered in jungle, so it's a little bit more challenging. But there's the potential I think is so significant here. So we look about, you say they're harder to find. Ecuador is one of those locations where there just hasn't been a lot of money spent on exploration. And you look at Fruta del Norte, you look at Sol Gold's discovery, and there's many other companies now here. And so I think there's phenomenal opportunities.
Paul?
I just want to follow up on that. You're paying down your debt, $2.3 billion market cap, so it gives you other options as well at a corporate level. As you've sort of been observing this M&A situation unfold over the past, let's say, year or so, what sort of trends are you picking up, and how would you characterize some of the transactions that have been taking place?
I think that for the gold industry, the transactions make a lot of sense. You can see what's driving them, and this industry does need some M&A. You look at how fragmented, how many players are out there, and everything. Gold does need some consolidation, definitely. But I think too, Paul, I think the leaders of companies in that are reserved, because we all know what happened last time gold price took off, and it got a little bit like the opening door on Black Friday type thing, and people went a bit crazy. And I think people are a lot more reserved and are making a lot more diligent judgments. So I think it's going to happen, but it's going to be a little bit more, I think, reserved and planned out. And it's going to make a lot of sense. We've seen a lot of mergers of equals, right? No premiums. I think we're going to see more of that.
And I suppose we're seeing that in the copper space as well. The supply deficit, the need to have more production and new mines in the copper space is even more intense, I would argue. And despite the fact that a lot of people in the industry talk about $3.50 being the incentive price to develop new mines, we're way past that. We're 40% past that, and still there isn't being M&A transactions. There isn't being new mine developments announced. Why do you think there's still that element of corporate caution?
I think copper's a little bit different than gold in terms of what makes sense. Again, the leadership companies are all everyone's under a little bit more scrutiny and everything. You've got to make sure that a deal is accretive and how you do it. And I think it's a little bit more difficult in the copper space, say, than in the gold space to do those types of deals.
Okay, thank you.
Niels.
I just wanted to ask, do you think mining companies can stay disciplined when margins are still going to be really, really healthy? When you have a big bag of cash to not, it takes a lot of discipline to not go out and spend it. And it's easy. I think a lot of people still feel the pain from the 2011 balance sheet blowout. But I'm just sort of wondering, can they stay disciplined if we do start to see, sustained prices above 19, above 2000?
I think so, Niels. I really, truly think so. I think that, at least I hope so, that as leaders of the mining industry, that we've learned what shareholders are telling us and what investors are telling us. And if we want investors to invest in this industry, we have to realize that we have to manage their money a lot smarter than what was done before. And so, I think you're seeing dividend policies that are much more aggressive, and looking at paying down debt, other things, rather than just saying, okay, let's go on a shopping spree. So yeah, I think that will be different this time around. And I think it's going to be great. I think it's going to be great for investors too.
Is there the danger, though, Ron, as metals prices increase, company stock prices are increasing? So is there the danger that companies are going to miss the window because things are going to get too expensive? Just using Filo as an example, if somebody had been interested in Filo last week, putting on a premium, could have acquired the company for, let's say, $500 million. This week, it's $1 billion. So it's getting out of somebody's bandwidth.
Yeah, but don't forget who the major shareholder is, Lucas Lundin. And Lucas, whoever's going to do it knows they're going to have to pay full value. And, but it's that balancing act, Paul. If you're going to look at something, you're going to have to aim. The ones that are going to do well are the ones that are going to be able to move quickly and have a good, sound strategy for why they're doing it. Because if a deal makes sense, if it makes sense for both parties, you can make it happen.
Yeah,
I truly believe that.
Thank you,
Niels.
Just wanted to touch on something you were saying about bringing investors back. One of the things one of the ways people have described the mining sector is it's still dirt cheap. Margins are massive, and it's still, the sector as a whole is still undervalued. What do you think? And if the dividends from last year, if we're still dirt cheap after what happened last year, what brings the investors back? Is it just a time element now, or does something more have to happen? How big do the dividends have to get before investors really start to see value in this marketplace again?
I think it is a little bit time element, that there is that, okay, you fooled me once, you're going to fool me again. And I think they just want to see that there's some discipline. I use that word. It's that discipline is there. The leaders of the company, the custodians of the shareholders' money, that's going to be there. And I think when they see that this is being run smarter, I think there's some great opportunities, and I think for investors that come in, it's going to be a great opportunity.
Ron, could you give us a temperature on what is happening with the regimes that companies are operating within down in Latin America? Of course, there's a runoff that's happening in Peru right now, and that was down to, I believe it was Fujimori and Castillo, the socialist leader. There was also the changes to the Chile's constitution that is working its way through right now. What's happening down in Latin America? Because we see these headlines coming through.
Well, Michael, Colombia too. Colombia is really challenging right now with the protests and the riots that are going on. And what's interesting, I was in a board meeting, a Jose Maria board meeting actually earlier this week. And one of our advisors, who's also advisor there, said, who would have thought, Ron, that Ecuador would be the jewel and the calmest place to be in Latin America? And it is. And in fact, we just have a new government, a new president taking over next week, a week today. No, I think it's 10 days from today, Guillermo Lasso. He's putting together, I think, a very good cabinet and highly recognized. The International Monetary Fund and Country Risk Index, bond indexes have all risen quite a bit since Lasso was announced president and taking over on the 24th. And Ecuador is looking like it's the place to be in terms of a future. And the great thing is the country knows they need mining, they need oil. As I mentioned earlier, we're US dollar here. And so they need those types of industries in order to bring that foreign investment in and create significant exports. So, yeah, who would have thunk it, a few years ago?
I just want to sort of make a follow-up comment to the recent bit of the conversation about dividends, because I think in some ways this goes back to what Mark Bristow at Barrick Gold was on about a couple of years ago, about being able to put a financial plan in place, 10-year forecast and production and therefore results estimates, so that mining companies can be truly become investable by generous investors and become sort of dividend aristocrats. People, effectively where people can put their money in, they know they're going to get a regular dividend for 10 years, more than 10 years going forward. Changing the reason that people invest in mining.
Yep. No, it gives Ben that discipline and that plan, right? And that goes to the point Neils mentioned, that will bring investors back.
Yeah.
Ron, we should ask you this question because you just finished putting the last touches of paint on your Fruta del Norte down there in Latin America. We keep hearing about these stories about renewable energy being added to mine sites, rejigging their processes. Can you really make can you make a carbon neutral mine? Is it feasible?
That's and the answer is yes. Michael, you can do that. I think some of the technology, particularly from some Canadian companies now, and the McLean and a few others, in terms of electrical underground vehicles, etc. You look at us here in the rainforest. Our power comes from the national grid, which is well over 90% hydro. So we're just in the midst, because we, as you said, we just kind of finished putting the finishing touches on, but we're already benchmarking ourselves, and our carbon per ounce is going to be one of the lowest in the industry. But we still are looking for opportunities, particularly with underground and other areas. But can it be done? Yeah, I think it can be done.
There was a report out this week, I think it was published or sponsored by the Weir Group, an engineering firm out of the UK. And it was talking about the next iteration to reduce carbon emissions from mining operations, to look at the processing, the crushing, grinding, the comminution circuit. They said that represents about 25% of energy usage in a mining operation, and there needs to be much more research to focus on that. It said that even small changes and improvements can make a huge win. So imagine there's going to be a lot of more focus on that going forward.
Let's turn to our number of the week. Ron, we always start with a guest. What's your number?
2. And the reason it's 2 is 1, I think Niels will like this. Gold's going to have a 2 in front of it for this the good chunk of 2021. And
I like that. I like that.
And the other reason I've got 2 is our exploration program at Barbasco. I believe we'll have discovered the second Fruta del Norte before the end of the year.
Those are some big numbers. Those are for being a 2. Those are some big numbers.
Paul, what's your number of the week?
I'm going to go back to sort of Filo Mining and why the exploration space can be so exciting. So my number is 390 million, 390 million Canadian dollars. That's how much, more or less, the company's market cap increased by reporting that one drill hit.
Wow.
Niels, what's your number?
I got to go back to inflation. I can't stress it. 6.2% producer prices. I don't think we can really, that's not a number you can ignore. I don't know if it's transitory. This is going to be something that we're going to have to watch closely, because and for producers, when prices go up, they generally they don't really go back down. You'll have blips and stuff like that, but generally the trend remains up. So that's my number.
From everybody's big number to a very small number, 0.125%. Once again, 0.125%. Global fuel cell electric vehicle car sales jumped 89% year on year in the first quarter of 2021, hitting a record of 4,000 units. That is from the World Platinum Investment Council in a report released this week. Once again, that was 4,000 fuel cell electric vehicles. Compare that to the number of plug-in vehicle sales in 2020, which reached 3.2 million. And that's 3.2 million. So there is hope for fuel cell electric vehicles, and certainly the people in the PGA space see that there is opportunities for it. But there is a real discrepancy between the amount of fuel cell vehicles that are currently sold versus what is happening in the battery electrical vehicle space. That's it for us. Ron, is there any news we should look for out of Lundin Gold over the next 12 months?
Yeah, Michael, I think, the ongoing quarterly releases and obviously our exploration results. We anticipate receiving assays in that in the third quarter. So that's going to be something really exciting for shareholders to watch.
Reach out to us. You can follow me on Twitter at Michael McCrae. That's with 2 C's. Niels is at Niels_C. Paul is at, and you have a new handle, Paul?
CGS 2021 Gold.
And I think there'll be some announcements around that handle in the future. And Ron, how would you like people to get a hold of you?
They can get a hold of us through our website at www.lundingold.com.
If you like what you hear, tell a friend, and don't forget to subscribe to iTunes. And always, if you have a suggestion about the show, tell us what you would like to hear, and we'd like to act on it. And before we go, I want to thank our producer, Daniel Abrams, who has produced Roundtable and many other shows for me for the past month. He's been dogged in making these shows good. I've loved working with him, and we wish him best on future endeavors. Ron Hochstein, it was a pleasure.
It was great to be here, and all the best, Daniel, in your future endeavors.
You've been listening to Kitco Roundtable. I'm your host, Michael McCrae, on behalf of Paul Harrison, Neils Christensen, Ron Hochstein. Have a pleasant weekend.